Bitcoin represents a paradigm shift. It's the digital transformation of money, property, and energy. And paradigm shifts are so profound that you're staring at them and you don't realize they took place because your worldview is constructed based upon a bunch of assumptions that you've always taken for granted. And so what Thomas Kuhn says in the structure of scientific revolutions and what we study at MIT is there's only two circumstances under which people willingly undergo a paradigm shift. And one way is you wait for the old guard to die. And the millennials kind of, they get it because they're different. And Einstein, said God does not play dice with the universe. Einstein never liked quantum theory. You could be a brilliant person, but you won't embrace the paradigm shift.
Don't forget to subscribe, crypto traders. Let's continue with the interview and the analysis of this one.
While you're alive, in the absence of a crisis, the second way you get paradigm shift is a war. When there's a war and there are bombs dropping from above, you don't believe in atomic power, but then someone drops a nuclear weapon and the city evaporates, and all of a sudden you become a believer and you reassess your priorities. Even when it's 10 times better, what you have is a commercially successful venture. But for example, Warren Buffett never invested in Microsoft, and Warren Buffett never invested in Amazon, right? Even though it's 10 times better, right? If you have enough money and enough power, you can ignore stuff. My dad didn't use any of the new technology until at some point we gave him a television and YouTube, and YouTube did it. Like, he didn't care about all the other things, but if you can sit and you can talk to the remote and you can stream on YouTube to anything, all of a sudden 80-year-old man.
Warren Buffett has exhibited a notable resistance to change throughout his illustrious career. Despite achieving remarkable financial prowess, Buffett notably refrained from investing in two tech giants Microsoft and Amazon, raising eyebrows in the investment community. One could argue that this resistance to embrace emerging technologies and rapidly evolving markets stems from Buffett's deeply ingrained investment philosophy. His traditional approach favors companies with durable competitive advantages and predictable cash flows. Technology stocks, often characterized by rapid innovation and unpredictable market dynamics, may not align with Buffett's preference for stability. Mark Saylor posits an intriguing perspective on Buffett's resistance to change. He suggests that the accumulation of significant wealth and influence can create a paradoxical situation where individuals, despite their success, become hesitant to explore new opportunities. In other words, having ample financial resources and wielding considerable power might inadvertently foster a sense of complacency or aversion to taking risks. This phenomenon is not unique to Buffett alone. It underscores a broader challenge faced by successful individuals and established entities: the tendency to cling to familiar strategies and overlook potential investments that fall outside their conventional scope. In a rapidly evolving financial landscape, Mark's observation serves as a poignant reminder that even the most accomplished investors can be susceptible to a reluctance to change. Embracing innovation and adapting to evolving markets becomes a crucial consideration for anyone navigating the dynamic world of investments, irrespective of their level of success.
Decides he loves this now. And so it has to just click. It's the second quarter of 2020. Okay. The second quarter of 2020, and what clicked was we had a K-shaped recovery. Main Street was shut down. It's pretty, millions of people have lost their jobs. The economy's contracting. And then Wall Street exploded and recovered and hit all-time highs. Cash trash. Ray Dalio says that is generating 0% interest. And the money supply expanded by 20% a year for the past 2 years. You can see it in U.S. single-family homes, which shot up 40% in price. And so if the money's being devalued 20% a year and you're generating 0% interest, you got a negative real yield of minus 20%. And I did the math in my head, and I concluded that pretty much the $500 million in purchasing power would be cut into $250 million of purchasing power in 36 to 48 months. So that's a slow death. I could use cash to pay my employees, but ultimately we were sitting and mired. And so that doesn't work. And so in that situation, we decided we should do something transformational. And, and if you went into a Harvard B School class and corporate strategy said, what are you going to do? The investors want the cash back. You can't generate a yield on the cash. The company needs to grow. Well, the answer is you do a transformational acquisition. So if I could have bought VMware, or if I could have bought WhatsApp, or if I could have bought Snapchat, or if I could buy like a super high growth digital monopoly or some moonshot thing that would go to the sky, then yeah, maybe that saves the company. But those are few and far between. Most of the time, these acquisitions that you do are dilutive. And I knew they're dilutive because, like, Pete, it's not my first rodeo. I lived through this. I invented, I launched 12 different product lines to grow the business, and there were singles and doubles or whiffs. And I know that just innovating won't always help you. And then I bought the stock back, and I knew that didn't work. And then I spent hundreds of millions of dollars on sales and marketing to expand the business, and that didn't work. And so then I watched all my competitors, Business Objects, Cognos, every company, I watched them do acquisitions to try to grow, and every one of them failed in that strategy. There was a 99% mortality rate.
Wow.
The reason we're the biggest independent business intelligence company left is because the other 100 all went private, got bought up, got amalgamated, and sucked into the bowels of IBM and Oracle, and then dismantled over the course of 20 years. So I kind of knew, I tried everything for a decade. I knew it wasn't going to work from first observations.
Companies often encounter challenges in generating substantial returns from their available cash reserves. When faced with such situations, a strategic avenue that emerges as a compelling solution is transformational acquisition. This approach involves companies acquiring entities with the aim of not just bolstering their current portfolio but fundamentally altering their operational landscape. Companies such as VMware, WhatsApp, and Snapchat serve as compelling case studies, showcasing how strategic acquisitions can propel organizations into new realms of success. These instances demonstrate that beyond the conventional methods of deriving value from cash, transformative acquisitions can serve as a catalyst for sustained growth and innovation. It is essential to recognize that the success stories are the exception rather than the rule. While transformative acquisitions have the potential to reshape a company's trajectory, the reality is that most acquisitions tend to be dilutive. This means that they might not deliver the anticipated level of positive impact and can, in fact, dilute the overall value and efficiency of the acquiring company. In essence, while transformational acquisition stands out as a promising solution to the challenge of generating yield from cash, it demands a nuanced approach. Companies must carefully assess the strategic fit, synergies, and long-term implications of potential acquisitions to ensure that they indeed serve as transformative catalysts rather than dilutive diversions. By navigating this path with strategic foresight and due diligence, organizations can position themselves to not only weather financial uncertainties but also thrive in an ever-evolving business.
So I thought, well, what if I could find a digital gold, which was better gold than gold, something that is better than gold, but also a big tech monopoly? And here are my three criteria. I want it to be a better gold than gold. I want it to be a big tech monopoly, and I want no one else to appreciate it. I want it to be underappreciated. And that's what Bitcoin was in the second quarter of 2020. No one thought it was an institutional asset. Even though Amazon stock had doubled in the second quarter, Bitcoin was trading about the same as it had been trading in 2018 or 2019. It got up to 10,000, it had smashed down to 4,000, it was back at 10,000. So I looked at it and I said, well, based on all the information, you would think that a digital property network or a global digital money network is more valuable, knowing that people are losing confidence in currencies, losing confidence in central banks, losing confidence in governments, and this is a non-sovereign, open, decentralized system. So we're there. We have to take a risk. We literally have to, or we got to sell the company, right? We're done one way or the other. And I said, well, this is a reasonable risk because it looks like the Facebook of money or the Google of money in the year 2010 or 2011, while 98% of the world doesn't understand it, it's a bit too complicated, they're afraid of it. But just because you don't understand it doesn't mean it isn't true. It just means, and I had the experience of riding the mobile wave.
Yep.
And I'm the guy in 2011 that bought Amazon, Apple, Facebook, and Google stock, and they all worked out well. And I thought, the year's 2020, we're at the end of the mobile wave. I tell a story of, I tell a funny story in the mobile wave about my niece on a beach, and she's like, I don't know, 8 years old, and she wants the Big Apple. And I said, oh, you want to go to New York City? And she's like, give me the Big Apple for my birthday. And I said, you want to go to New York City? She goes, no, I want the iPad. And I thought, okay, little girl wants an iPad. That means that the entire world wants this, and this is going to be a big deal, so buy Apple stock. Well, in 2020, I'm talking to the same niece. And I said, what do you think? And she goes, yeah, well, I just bought some Amazon stock. And like Amazon's trading at like $3,300 a share, and it just doubled. I'm like, okay, well, if 20-somethings now know they should buy Amazon and Apple and Google, this is not a misunderstood technology trend anymore. Every Uber driver understands that. So get off the mobile wave, get on the crypto wave, and think that through.